Hello traders, happy Sunday. It is April 14th. We're going to dive in and do a future study. I've rejigged my setup here a little bit in anticipation of the chat room launching here in a couple weeks. I've got my typical large television behind me with my setup, my screen here, and then my laptop, which I'm always running my scanners on. So I typically run about 3 monitors. We're going to jump in and do our study on our 4 futures that we're watching again: gold, oil, natural gas, and of course the E-mini. Let's jump on in the chart and see where we're at. We'll start with gold. I think that might be the cleanest chart out of the group. Let's jump in and see what we got. Here we are on our gold daily chart. Same setup as we've had before. We're going to move on in. So we've pulled in to a new high, which we've talked about, which was all the way back in February. We've had our pullback. We've had a correction or an up move. We had a good down move. And now let's take a look at what I think is forming here. There's a good opportunity to trade this setup, I believe. This may be a little bit of a dirty chart for you guys, but for those of you that don't know me, I'm always using yellow as my color of strength. So when I put yellow on my chart, it's for me psychologically, it means I need to respect it. And if it's a dotted line, it means that I haven't yet confirmed it, but I'm pretty close to confirming and turning it solid. If it's solid in yellow, it basically means that I better respect this level at all times moving forward. Connecting our highs, we can see we projected out an excellent downtrend, and I believe what we have forming here is an uptrend support on the daily. That I really like about this chart in general is that the Fibonacci range is somewhat respected. We had a nice failure at this 50% and a push down. So what I'm looking at, especially over here, you know, on my grid, it's easier for me to see during the day while I'm trading because this is all my daily charts set up. So we'll go into the hourly chart and see how we're looking here. The chart is pretty clean. There was an excellent opportunity to short if you were going based on the daily downtrend that we had, which we had 2 touches and a confirmation on the third, which confirms that this is in fact an overhead resistance that is descending, which is fantastic. Price traded very hard off of that level. MACD cross, RSI oversold. You had a bunch of divergences in this area. I did not take any of these trades, by the way, but I'm just pointing them out. You had divergences in these areas here. You had divergences on the MACD, and an excellent opportunity to just take this whole setup and crush it short into this area of previous liquidity, which is where we're kind of at. So basically at the moment, anywhere between 1290 and 1300 is kind of this zone that we're watching. If we consolidate on this rising support, we'll change this to a solid line and have this as confirmed. If this does suit a confirmation, I would anticipate that this trades back up here, and then either we break higher over this 1310 level, 1305, depending on where we go, or we trade potentially back down into this, you know, rising support, and then we can form some kind of a wedge or a pendant. But as I've talked about in the past, guys, I'm not really a big fan of non-mathematical shapes. They're really arbitrary. They're easy for your eyes to see in hindsight, but to trade them in actuality, it's just a gimmick used to sell you on nonsense. So for now, let's just be price action oriented. We're back out on the daily. I just want to talk about if we break this rising support here that we have, I would look for the target either to be to retrace this move 100%, which would be a pretty decent level all the way down to somewhere around 1280. Obviously, your 200 EMA is rising up. That'd be a pretty nice target if we do break below. Right now, though, you kind of just got to play any level above 1300 to the long side and any level below to a break. I'm not really interested in that 7 points in between in there. I don't have any interest between where it's at and 1300 unless we break lower. Let's go ahead and jump into our oil chart next. This is our daily view. And I have a lot of levels on here because these are all micro levels that when we do eventually break, I'm going to be using these to trade all of these down to the short side through the move that I believe is coming in the later half of this year. These yellow lines are my area that I was looking to go short in. I have not taken a short yet. I closed my long position. I'm net flat. Looking for this supply zone based on a previous area, which was this swing low we had back in June of last year, which was almost confirmed. and then this consolidation period, which was our previous consolidation to break low. It's really our only area in here that we have that we can trade off of where there was any consolidation. That's all the way back from October. So these lines are unconfirmed, but that's currently what I'm watching. We'll zoom in a little bit and see if we can't get a better idea of what's going on here. I really like, again, this rising support that we have that we're breaking under. There's a chance to maybe take this short, but at the moment, I'm just going to wait and see because I'm not going to make any predictions here on oil. We're still in an uptrend for now. The hourly chart on oil tells a pretty good story. This is a very clean chart for trading. It's how I've been able to be so profitable on it in this last few weeks. Really like the way this is setting up for a potential short if we get a retest, or a long for a breakout if strength continues. But for now, I'm net flat. I have no open positions. I closed my long, and I'm just waiting for the next bit of opportunity. My daily levels here are really key. This is my unconfirmed support where was the bottom of my range where I was looking to short all the way up into the 66 level that we were talking about was my channel that I was hoping this would form to give a better short. We've kind of failed getting into that range, which isn't very surprising. So we have this rising support from this previous move here, and if we extend this to the left, you'll see that there's interaction from last week as well at that level, which really makes this a very nice kind of confirming setup. We're going to remove that extension because I don't want it to confuse my drawings for previous price action. So how am I looking to trade this becomes the question, right? How do we trade? Well, the clues that let me exit my position were that we had this triple top and we had this ridiculous divergence on all of our levels across here. Divergence, and lo and behold, that 64 level we're underneath. So let's zoom in and we'll go into a 15-minute chart to try and just clean this up a little bit and give a better idea of how to trade. I wish it wasn't after hours and I wish it wasn't Sunday. We'll have to see how this plays out here. I will be looking to take this to the short side for a momentum break anywhere under 63.40, and I will be looking to be long on a follow through above the 64 level, with obviously the intention here that we have this triple top. If for some reason we show any kind of weakness pulling into this level, either 64.50 at the half dollar or all the way up here in the 64.70 range, I'm going to immediately bail out of any potential long that I may be in, because I do not believe that the strength of trend is there yet. If there's material news, if there's heavy volume or some indication that price may follow through. But for now, I think we may end up repeating what we had 2 weeks ago, which is where we may end up forming a range up here, and that range may end up being somewhere between 63 and 64.50. This may be our new range as our moving averages converge, and we'll have an opportunity to see if we can get a breakout cross or if we get a short setup. I think that this may be the final drive of our potential trade. We had a really nice range all the way back in March. We had a drive 2 weeks ago, consolidation, another drive. This may be it, but I'm not going to call a top. I'm going to let price action tell me it's a top. So for now, I'm going to be scalps only. I'm not going to be taking any large positions. Based on our daily chart, we have this inverted hammer. It's just ugly. There's no real clean setups here to trade. Technically, the trend is still long, but this is just ugly. This is really ugly. So breakouts to the short side, consolidations to the long side, with the idea that weakness is developed in here very significantly. And if we're long, we need to be in and out quickly and potentially taking shorts off of this level as well. Let's take a look at natural gas. Here we are in the natural gas daily chart, and we're just back in this kind of situation where I thought we would be, which is we're still in this downtrend, but there's no real volatility. You're too low to the bottom of this range to really be getting any large profits. So unless you're like on one mini contract and you're a small account swing trader looking to continue this, maybe to retest the lows, there's not enough opportunity in here for me to do anything with this position until we either retest our low of this recent move or we trade back up to the top of this channel which is where I'm calling this support, where we had this previous consolidation, a retest, failure, very close, but some failure. So if we trade down, potential long side if we don't break out, and then when we trade up, maybe a potential short as our 200 EMA would come down. For me personally, natural gas is still a no touch. I don't like any of these levels. I'm not interested in really this setup by any means. And now for the big finale, we're back on the E-mini futures. There's not much to say here, guys, other than technically speaking, this should not be trading higher. This is ridiculous. Elliott Wave, you can pick whatever technical analysis tool that you're interested in. There's a lot of people screaming top, top, top. Trend is your friend. And, you know, we're less than 2% away now from all-time highs. I don't see how we just stop here. It doesn't make any sense to me. We should, at the very least, retest. Now, when we retest, you know, you have to remember that there's people that have, in the last 18 months, have held through some pretty considerable drawdowns when we've been up in this level. So if we fail again up here, I'm not saying we're going into a bear market, but you could definitely pull back into this 2,800 level off of these highs. So for now, if you're looking to trade this, we'll go into the hourly chart. Very strong trend. Buy a pullback. I don't know what else to tell you. I mean, I'm not going to get in and try and analyze this entire chart and pick out levels. Here's my level here that I've been trading off of. These are all my levels. You guys have seen them in the past. These are my levels. I mean, this is it. We're above the 23.6 Fibonacci retracement, and we're headed back to zero. So if you were long in this 38.2, which is where we talked about where you should have been long, then you just got an easy street trade. You know, you should have a trailing stop in. You should be looking to add to your position. You have plenty of days before contract expiration, so there's no reason to be worried about rollover here. I hate to be blasé about this, but it's the ES. There's no reason for me to be trying to dial in levels and play market wizard here. It's trading higher. End of statement. That's done. Here we're back on our quad view. Just trying to give you a recap real quick of everything. So gold, this rising support, short under the rising support, long back up to retest descending resistance. Oil, I'm looking for a range to form between my levels here, which is 64.50 and 63. Short biased temporarily. Natural gas, I'm out. I have no desire till we retest low or we get back up into this channel where I can reshort. And ES, same old, 2% off of all-time highs. Don't fight the trend. Don't fight the bulls. Strap in and enjoy the ride. I hope someone got some of this profit. I took a trade down in here where I got this bounce and I took a retracement. And I probably missed almost $200,000 of profit since February. So this hurts. But my convictions as a trader are if I get out, I don't rechase. Whatever caused me to get out, unless I'm interested in a different market. For me, I'm trading oil heavily right now. It's been very profitable, so I'm not looking to double down. I'm not looking to play games. Oil's where my focus is. If we top out on the ES, maybe I'll take some aggressive shorts. We can get some very quick moves, get 20, 30, 50 points maybe very quickly. So that's it, guys. I hope this helps. I apologize. My energy's a little low. I'm a little under the weather today. I'm not 100%, but I wanted to get this out for everyone to kind of jump on and get an idea for the week. Enjoy yourself. DM me any questions. I appreciate you all again. Stay hungry and humble. Thank you, guys. Good night.